Yo, so welcome back to the first episode of Apex Traders. Yeah, I hope you'll be here for a long time. So, these are an educational YouTube channel where we'll be doing this exclusive trade setups and we'll be posting these trade setups on live before we execute them or before we take any trade. We'll be doing this like every fucking weekend, whereby we will be analyzing the whole week and what to expect during the week. So this is what we do before the week starts. On a Sunday like this, we sit behind our computers and find something to do. I mean, what we do is something called pre-market analysis, so that we go into the week with a clear picture on what to expect of the market. And these expectations are also not fixed. You understand? As much as we have all this knowledge of the market, as much as we are confident about ourselves, about the market, we are not like going into that week with a fixed mindset. We know what data points to expect, we know what price should react at different levels, but we also leaving our minds open so that we can ride the wave of the overall trend or the overall bigger time frame picture, just in case we are wrong. And being wrong, we're not even afraid to be wrong, because at every time that we're wrong, we like mitigate our risk, and that's our power. Because in trading, we don't have the actual outcome of the trade, but the only thing that we are in control of is the risk management sector. So welcome back to Apex Traders, and stay here for a long time to earn value and see us grow, and also we can grow with you. Alright, so I'll tell you the main pairs that I actually look at. I actually look at GBPSD, and I've been looking at Nasdaq lately, though I haven't have that constant, constant thirst for Nasdaq, because I'm already so much used to GBPSD. Also, I might invite my other friend who is Marsh. He deals with a lot of pairs, so after me giving you a general breakdown of GU, sometimes I look at EURUSD, sometimes, because they actually move the same. I'll also be inviting over Marsh to talk about gold, to talk about petroleum, to talk about other indices, because he trades a lot of pairs, and he's a swing trader and I'm an intraday trader. So just stay on and you'll see what you can do for you, because as much as we grow, you also grow. You also learn a few things from us. You also learn a few knowledge from us, and we're okay with it. Okay, welcome, and stick to it, man. Yeah. We're about to start that live up right about now. I'm just waiting for some few clearance and we'll be set to go. So just stay tuned. Okay, before we start, I'll tell you an overall overview of what happened on GU last week. So GU last week, actually, I was expecting a buy after that news from Friday, Wednesday, that bullish move. We were at a discount price of the weekly break of structure. As you can see, the previous low that broke the high, I expected it to be respected, right? Yeah, right. Just because the other week it had broken the structure. But that's what happens with the market when you have a fixed, constant vision of it, because you'll just be disappointed at the end of it, right? So doesn't mean that we didn't make money after the break of structure and so on, but That is because we were quite flexible and understood what the market was doing, and we kind of just ride the wave. So, also, something that I should tell you is that these days that have high impact news such as CPI and FOMC and all that big red news, all that stuff doesn't increase your probability of being a profitable trader or something. You should get that into your head. In fact, you can lose a lot of money when this high volatility news get into all that. Actually, our strategy is more profitable on days that don't have this news. So if I'm trading news, I won't trade news at the exact time when the trade is formulating. Do you understand? Like, it is either I'll only trade news with two formulas. It's either news will occur when I'm already in a trade, that means I've already bought or sold a share. If it's that way, that means I entered that position based on my analysis and my analysis was correct. And if I take a loss on that, that means that that was a good trade to take for me. In fact, it's just a win for me. Another thing is, I can also take that trade after the news has already happened. Why? Sometimes you could see price consolidating over a certain point for a long time. You understand? Like 2-3 days, it ain't moving these big moves. But what news does is news comes and acts as a catalyst to speed up the reaction. You know, if you know the meaning of a catalyst is like something that speeds up the reaction of the process, right? So I can use that news to reach out to a certain level, psychological level, support or resistance or OB or whatever the case. Once it has tapped into that place, then I'll be confident enough to enter the trade. As you can see, I didn't trade the news while it's happening. I traded before the news and also after the news. I think this will be of great I don't know, help to you as a beginner or something, but I think I've helped out enough. So what happened last week? I was waiting for some huge buys or on WBSD. So what happens on weeks that have these many red flags, red news? You know, like when you open up this, you should obviously you all look at the news at forexfactory.com calendars and shit, right? So when you look at these weeks that have this big impact news, it doesn't mean that those weeks are the ones that you're going to get a lot of money out of it. In fact, if you are a conservative type of person, these are the days that you should like stay out of the market, bro, because there's a lot of manipulation. Because I'll tell you this, because the first news, which was on Wednesday, it was kind of manipulation, which triggered or lured all the retail traders on Wednesday to take buys, and everybody obviously had their mind fixed on buys all the way there. Thursday comes in and Friday comes in, all that great move that y'all thought it will never go and retrace, bro, you know what happened. Yeah, it damned down, you know. Yeah, so these are the interesting things about the market that I will likely to share with you. So I hope you'll enjoy all our episodes and just stay tuned. So I think this is one of the realest podcasts, the most raw trading videos you can ever see. You understand? Because we're talking from a point of view where we've been learning this shit for years. We can say like now it's 4 years. Yeah, no, 3 to 4 years. So I can tell you that we did this shit from scratch and we're still growing. And I've passed through the problems that you do pass through today or every, and I also do pass through them right now. It doesn't change, like you know, like everybody does pass through all this shit. But what I'm saying is, this is the most authentic trading channel, you should have like subscribe that button and shit, because like we've learned this shit ourselves and we have shown interest and resilience after. Nigga, we lost a lot of money, bro, but doesn't mean that you can't make money. You know? So that's it. So you have to mitigate your losses and make sure that once you get your wins, like this. I got my friend. I already talked about him much. He'll advise you this, like, make sure your wins are 1 to 4s, because if you take a trade and it's 1 to 4, it actually takes 4 bad trades to come to break even, and it comes to these days or weeks that you have constant win rates in there. Like, you have like 4 wins, and if you see 4 wins, 4 times 4, you are 12 are up. And if you have this knowledge, you can't tell me you can lose 12 rounds in a row unless you're just over trading and doing all that stupid shit. So let's get back to the video and let me get into the details. So we can just look at our trading view, right? Yeah. And one more thing about full-time trading, doesn't mean like you own the trades all day. Like, you gotta have a schedule to this shit. Like, for me, I only trade okay, I used to trade whole days, but I just realized that when you sit behind the screen for the whole days, there's a big chance that you're gonna keep on making some stupid mistakes, right? Yeah, right. So I do like have a half a day with a constant schedule, then come back and actually make sure I'm on time for my New York session. So I go sell in the morning till noon, then I'm at my desk by 2, and by 4 or 5 I already made my money and I'm out. You understand? Less time to the charts and more money. But if you're a beginner, you gotta spend like at bare minimum of 6,000 hours looking at this shit, bro. Ain't gonna lie, ain't no joke, bro. If you wanna like know this shit so bad, then you gotta be willing to put in the work. You gotta be willing to put 4,000 hours of work, bro. I ain't lying, I did that. I'm human. My friend did that. Who you? So if you're really willing to do this, you gotta spend 4,000 plus hours to read the course book. And after reading that, it's not guaranteed that you're a perfect trader. After that, you go to the screen time. Experiences like even if there's a lot of knowledge out there, let me tell you something. You'll only grasp these few details by doing actual practicals with actual real money to this. And I'm telling you, it's gonna hurt sometimes, it's gonna hit you in the back sometimes, and that's the beauty of it, yeah. Okay, I'm about to share my screen with all of you, and just straight up you'll click on the link. I'll be sharing the link in a few. Just give me a minute to organize my work so that when I start, I don't have to go back and forth. Yeah, it's called Apex Traders. Apex Traders. Do you know the meaning of Apex? Apex means the top of the chain. Apex predators means like the top of the chain of the predators. Like a predator that can't be hunted. You understand? So our channel is Apex Traders, and try and show you. If you're a good student, you can also be an apex trader and make at least something and pay off your bills and shit. But that will only happen if you pay attention to what I'm teaching you. And I'll tell you, this is one of the most competitive careers you'll ever see. If you think you're coming here to do this thing as you think it's easy, then just go look for another damn career, bro. Because this shit ain't easy as you think. If you can make money in 30 minutes or 1 hour, that means you put thousands of work so that you can just make that money in 1,000 hours of work so that you can just make that money in 30 minutes or 1 hour. So if you're looking for something easier, I'll advise you to go do something else. Go to college, do teaching, do whatever. But if you're here, then you should be strong enough. Your mind should be strong enough. You should be resilient enough. And most importantly, this is for those people who are introverts and shit. Because if you're an outgoing person, you're a party person, you like to party and all that shit, moving with the crowd and shit, this is the wrong place for you. So before we even start, just cut yourself off, because I'm only here with people who are serious to do this the right way. I'm not playing that gambling mindset and shit. So let's get into it. So I'm going to screen share my application right now, and hope you all benefit from this video so that you can give me the momentum to continue helping you all, and as also we continue growing together, because this is just the start, bro, because we're just getting started. All right, we're getting started. So y'all gonna expect some lot of shit, bro. Big. Hello. Okay, welcome back. We're live, so everybody can see my screen, right? Yeah, I think everybody can see the screen. So before diving into the next week, we always take we do a pre-analysis of the market, of the specific pairs that we go and look at and trade during the week, have a genuine expectation of the week, and also allow ourselves to be flexible if the market conditions change. Okay, when you look at my watch list, I only have GBP USD, I have WorldCoin USD, and Euro GBP USD. So the only pair that I actively trade in there is GBP USD. Euro JPY, I actually look at it as another pair, but I don't actively like trade it. But in this video, I'm gonna give you a breakdown of GBP USD and Euro JPY. Okay, WorldCoin also is on my watch list, but it's not necessarily for trading for trading business. WorldCoin is an asset, so I use WorldCoin as a new crypto asset that's coming up, and I'd be willing to invest more into it in the future. So I also just have that chart of WorldCoin on my screen, so as to tell me when the stocks are buying and or when the stocks are selling, and also show me where the prices of WorldCoin is. So I'll get into it. We'll start with GBP USD, and we'll start from the monthly time frame, and I'll also go as far as 3 months time frame. So my screen is already marked up, but I'll just take you through the thought process how I marked up that screen. Okay. Well, let's just start from the 6 months. So what I'll do is something we call top-down analysis, which most of you are familiar with. So I use top-down analysis in relationship with price action. So, price action to me is the current state of price at that point or that given time. That's how I look at price action. So don't get me wrong, I'm looking at the price action of that day. I think we're clear. But before I do that, I also analyze from the monthly, weekly, and all that. Okay, as you can see, this is the 6 month range. From the 6 month range, I'll just use this tool to show you more of it, like to make a clear pattern of what we're doing, so that you all can't be confused, right? So let me show you something. I'll leave this pattern right here, this polyline. Okay, as you can see from the 6 months, we came down. I hope everybody can see the lines that I'm drawing. We came down, went slightly back up right there, then went down, then broke above it, went down, went up, but we didn't break above it, went down, broke below the low, then went up, broke above the high, respected the low, but not for too long, then went till midway. I think that was a fractal nature of the market, then traded low. So from the 6 month view, we can see like we're in a constant downtrend, right? We traded lower, came up, traded lower again, went up, and the last move is a swing low. As you can see, the 6 month tells us that we're in a constant downtrend. So the price moved from right here down, up a little bit, down, up, down, down, up, up, up. Then this low broke through this low. So the 6 month tells us we're bearish. But it doesn't mean that in the daily or weekly or monthly we're bearish. You understand? That just gives us the general overlook. So from the 3 months, let's remove this since you already know what I'm saying. In the 3 months, we move to the 3 month. Go to the 3 month. As you can see, the 3 month is almost basically the same of painting the picture of what I just told you. So we went up. Let me just show you a bit. We were here, went up, down, broke above it, went down, went up, but respected that level, then went down. I think it was tapping into a 6 month order block or something. Then went down, up, down, up, failed to break above, went a little bit down. So then there, then down, right there, down, 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 and here this is the previous high that was responsible for the break of structure. As you can see, okay, as you can see, I've labeled this place as my 3-month range. Let me just get rid of that. This is the place that I'm talking about. As you can see, this is my 3-month range. Whereby, what I mean is, we went up, respected this level, then broke past the 3-month range, and we're like consolidating in the middle. So this is my 3-month range, as you can see that I labeled over there, and we in a 3-month downtrend, but in the middle. We don't know where we will actually go. Then we move into the monthly structure. As you can see, we're moving from the highest time frame to the lowest time frame, slowly building up the overall narrative, so that when we're in the daily, we actually know what to do. And I'll show you my 3-month range actually very well right here. Let me just put it above so that most of you can see. You can see I labeled it as my 3-month range. So this is what I mean by that. As you can see, we were here, went up, traded down, there, went down, up, but we respected that level. As you can see, we respected this level, then traded down, and here is where we are. So that range between this and this, these are 3-month range. Do you know why we say that it takes a lot of money to break structure? And that's why I'm telling you this is my current swing range. Okay, hope we understood. So we move into the weekly structure. So actually this tool that I use is just for the one to give us clear market mapping, you understand? But we don't use it. It ain't an indicator, it ain't nothing. It's just a tool like the trend lines and all that. So when we look at the weekly, we've been constantly in a what? A bullish momentum. As you can see how we have analyzed the chart from the top to the down, right? Just the top down analysis, right? So this is what I mean in the weekly. I know in my head that we broke structure, so that is so vivid in my head. You understand? So I know the 6-month, 3-month, and the monthly is bearish. So if there are good bearish moves in here, we're gonna just take advantage of them. So you can see we went there. So this weekly structure is either the pullback of the monthly, 3-month, or the 6-month, or is actually a shift in structure. We could just go also bullish all the way up, but we can't keep that in our head unless the market shows us where it's going. Help you understand? Okay, as you can see, we made a series of higher highs, and we now in this weekly range. As you can see, I had the monthly range, now I'm in the weekly range. My weekly range is this after this break of structure, and this is the lowest point that led to the break of structure. So as you can see, this is my weekly range. Okay, so that you know the weekly is bullish. Though it has been consolidating since December, we can move into the daily and see how we can utilize that. So again, we're just going to delete this tool. It's called a polyline, so you can use it to map out for clear mapping. So we go to the daily. Let me just as you can see, we're in the daily time frame. What does the daily show us? We've been in a constant uptrend, then we went into a consolidation, then we broke above the consolidation, and now we're bearish. But are we really bearish, or it's just a pullback for the bullish momentum? And that's why where I come in and analyzing. So I use this polyline again. Okay, I use this to be more accurate so that when I'm placing a trade, I actually do know what I'm doing. You understand? So this is what it is. From here, let's start from here. We trade it up, down. We trade it up again, down. We trade it up, down. Then we consolidated over here for a while. I think we consolidated from November last year to December. Then January 24th we broke to the downside. And when I broke to the downside, here's where I took those huge sells, those huge buys I told you about. So, and this is where I marked out my daily range. So after there, we went up, and now we're starting to come down. Okay, so here's some real source. Okay, and I'll also explain to you why a lot of people are buying last week and the sellers took over the market. Okay, as you can see, market went up, went down, went up, down, up, down, up, down. As you all know, in a trending market, if it's a bullish market, it should create a series of higher highs and higher lows, right? So after here, it broke through this structure and this structure. Now our current swing low is this one, and since it was responsible for the break of structure, we assume it is a strong low. Understand? So this was our range. Understand? So my previous range was between here and here, because this was the nearest swing low. But as you can see, when price pulled back around here, we saw that bullish reaction right here, and that's when a lot of investors try to buy over the market, and that's why I tell you, news could be a manipulation. This green candle on the daily right here, this was a news candle, and this other one was a news candle. So what happened is, it shows us that this low was not going to hold, so it broke through. And if it broke through, most likely it's going to break through this. But this is still a swing low. If we get a confirmation that the price is going to trade high, we're going to trade high. But if we don't make a good confirmation, we're just going to trade low. Understood? Yeah, I know you understood. So this week, what we'll be looking at is either if it's going to respect this strong low that broke this high. As you can see, I already I usually as you can see, I usually mark the structures and label what I see. As you can see that I saw this and wrote here the strong low which broke structure. But in my head, I also know that he didn't respect this low, so it's more likely that this low going to fail. And why is it going to fail? I'll show you why. This is the only reason we're going to trade low, and you'll prove to me after next week, bro. Pay attention closely, bro. Pay attention. I'm giving you some real hack right here. Bro. This is the only way we're going to trade low. See this big move right here on the monthly? Yeah, it's on the monthly. As you can see, this big huge candle, and it closed above but didn't break the structure over. So most likely the bullish momentum is over, it's weakening. So it has to come back to retrace and also gain more liquidity to push up. As you know, the market is like a car. A car needs fuel to move, and the fuel of the market is liquidity. So if the market is trending up and liquidity dies down, it has to retrace back to the original point to gain more liquidity and to trade upwards. So I think you understand. So the only reason I know that I'm going to be selling this way is if it's targeting this monthly a balance right here, or what my friend Marsh usually says is the order block. He looks at it like this. He looks at it like this. He calls this the order block. That space between there and there. You understand? That's the order block he's talking about. That's the order block he's talking about. But me, I look at these as an imbalance whereby I'll be waiting for a reaction right away. I'll be waiting for my reaction straight at the bottom, which is the same concept, but we're just looking at it differently. But here's what I mean. I'll be waiting for this point to be mitigated. You know, when it mitigates the end of that, when it just starts here, I know it has finished through the order block, it has passed through the order block, but it wants to breeze through here. So this will be a most confident place to buy my orders from. The weekly range tells us we're bullish, but you can see if it's within the daily, we need to tap in here, then go up. It doesn't mean that we're bearish. We could still be bullish, but it hasn't break the weekly structure. So it could just be looking for seeking more liquidity and trade above. So I think you've understood. So let me just get out of this and scaling into the daily structure and show you more. After this, I'll just do a little bit of WorldCoin analysis, which is this new cryptocurrency that is coming up, and it's trading at currently 1500 and a WorldCoin, I guess that's around 10.5 USD. Okay, I'll get back into that later. So I hope everyone can see the screen, right? Let's jump down to the weekly. Let's jump down to the daily time frame. Okay, this is what I want you to see in the daily time frame. As you can see, I think I've made a perfect explanation why we traded downwards, and that was because of news and all that. So if it's a bearish move, we're going to look for an imbalance in the 4 hour, 2 hour, 1 hour and 30 minutes. If there's an imbalance that will show us it's going to trade downwards, that's where we'll be waiting for our positions in the next week. It can happen any day from Monday to Friday, but the good thing is the best of traders are always patient to wait their moves and execute. Okay, so let's look. It has already broken this structure, so we're going to look at the place that was responsible for the break of structure, and that is, in my case, I look at it as that manipulation of that news. You understand? The news that happened on Wednesday. This is what I mean. We came down till here. It was to respect this low. Then what happened? It showed a little bit of reaction. Then down to downward. So from the beginning of the from the bottom of the reaction to the top of the reaction, that's my overall point of interest, which I want to see the price tap into it and see how it's going to react to it. And that's how simple it is. You understand? So simple. Okay, let me just mark up that. And as you can see, I'll mark it up on the daily, though as I trade inwards towards the smaller time frame, you'll realize that I'll be reducing that box because I know exactly where the price is going to tap to. You understand? Okay, I'll mark that region from there to there. What I said is from the beginning of a reaction to from the bottom of the reaction to the top of the reaction, that's the whole supply zone that I'm looking at, because that's where the